All right, traders, I am back again with another video, and I want to give you some tips to help you to start learning how to master the Forex market, okay? So I'm going to try to make the video quick because most of you who want to learn a skill and make money, you want to do it quickly, all right? You want that quick fix because you want to make money, but you don't want to take the time to learn how to make money. So first, I'm going to assume that you're already trading the Forex market and you're not a brand new trader. Because if you were brand new, there would also be some other processes that would be involved. Now, these aren't all the things that you're going to need to do to master Forex if you ever do, but these are some of the things that will help you to master the Forex market. All right. So I'm not going to put a time frame on how long it'll take you to master the market because really there is no time limit. You're going to hear people talking about, oh, I mastered the Forex market in 3 months, 6 months, 1 week, and whatever. I can't say that they did or didn't. I don't really believe that when I hear that, because to learn a skill, to learn how to do something proficient, it takes more than a week or a month to really do it. And yes, you could do it. There's people that probably have, but let's talk reality here. Most of us aren't going to do that. All right. It really took me basically, I know you don't want to hear this. It really took me about 5 years. Okay. Because first I made mistakes by myself, and then I started learning and studying more, and then I made mistakes still. And then I had to get someone to help me to understand what I was doing, and then still made mistakes, and then so forth. But once you had someone to help you, then you're on that path. So that started to help me out. So yes, there's no time frame how long it'll take you to master the Forex market, because basically when you start adding a time limit or a time frame on how long it's going to take you, you're adding pressure to yourself, and then the next thing you know, you end up failing and you never even get to be a proficient trader. All right. So as far as mastering Forex, the truth is most of us will never master the markets ever. But then there's those that who will. So we're going to act like there's those that will, and we're going to talk to those that will and those that could. So what's the big difference between success and failure? All right. So we all have the ability to master the Forex market. All right. But many of us succumb to pitfalls such as boredom. All right. Also impatience. Uncertainty. And then there's that fear factor. Fear is a major aspect in trading the Forex market, and it comes in many shapes and sizes and ways. All right. So you have the fear of just taking a trade because you're afraid that trade's not going to work out, probably because you don't trust your strategy or yourself. All right. Then you have a fear of missing out on a trade because you're afraid of this trade being a good trade and you miss out, so you take the trade anyway. Then you have a fear of letting your profits run because you're afraid that the market's going to pull back and you're not going to make your profits and you're going to lose out. So there's all types of fears when it comes to trading the market. So you have to learn to get those fears under control. And these are some of the reasons that traders fail. All right. So the great Albert Einstein once stated, "Only the one who devotes himself to a cause with his whole strength and soul can be a true master." So for this reason, mastery demands all of a person. So it has to be all of you. You have to give all your all to become a master at something. So if you go into Forex half-heartedly, then you're going to get half-heartedly results. So then you're probably expecting me to start showing you some very complex trading systems, but no, I'm not going to do that. That's not what is going to make you master Forex. All right. So that's going to lead me into the first thing that I'm going to talk about, which is going to be odd. Your strategy. Yes, your strategy. But your strategy doesn't have to be some very complex thing where this crosses the moon while the sun is still out and we need rain on that day. Please. You need to stick to the basics of trading, and one of the most basic concepts of a trading strategy centers around what? Without a strategy, traders make trades on the fly with no true rhyme or reason, okay? So basically, to me, a trading strategy centers around a bunch of things, a variety of things, and we'll look at some of those things real quickly. But then also, to learn requires a sense of humility, all right? So we must admit that there are people out there who know more than we do, all right? And it's not because they're much smarter than us or anything. It's just basically because the time spent learning or mastering the skill. So someone who's been in trading Forex for a month or three is not going to be at the same level as someone who's been trading Forex for 3 years, 5 years, 10 years, and so forth. So sometimes you have to admit that, yes, I can't learn this or do this on my own. I need someone to help me and guide me. That little bit of guidance can get you over the hump, because maybe there's something that you really don't understand or know. And just a little bit of guidance can help get you over that hump. All right, so then another thing that you're going to really want to know and learn is support and resistance. All right, support and resistance can be used for your entries, your exits, your stop loss. So understanding where support and resistance levels are helps you to trade with the smart money. All right, where the big traders are trading. All right. It's also important to you because to know these levels so that you're not trading long right into a resistance level or trading short right into a support level. All right, so most strategies in the market are based on support and resistance. So learning how to trade and spot these levels will help you a bunch. All right, so you need to learn support and resistance. It's one of the main factors in the market. You'll be watching TV, Bloomberg or something like that, and you'll hear people talking about support at this level, resistance at this level. Why are they talking about it? And you're not knowing it. That's what you got to do. You got to know it, because it's important to every trader out there. Next thing is a journal. You must keep a journal, guys. And in order to learn from your past mistakes and make sure that you're consistently executing your trades based on the analysis that you've done, you must have a trading journal. All right. So that trading journal helps you to look back over your trades, understand your progress, understand where you went wrong with a certain trade, and try to eliminate some of those issues. Journals help you to see so much in the market of when you take a trade, because you're writing it all down. You're writing your feelings down. Maybe you're writing why you took the trade. And then, like I said previously, you're writing if the sun is shining and the moon is bright and you're having a rainy day that day. Actually, you don't need to write all that. But yes, a journal will help you tremendously. Okay. And then the next thing, guys, is expectancy. So expectancy is the formula you use to determine how reliable your system is. So when I'm talking about expectancy, I kind of expect and know how much most of my trades are going to make. And that's from studying my system, going through the past trades, looking at my entries, where are they, and so forth. And then that study and understanding that helps me to understand the expectancy of most of my trades. So I'll know that, okay, I can expect this trade, most of my trades, to make 100 pips or whatever, 50 pips, 2,000 pips, right? But no, we wish it would be that all the time. But no, you kind of start to know that you expect the market to, when you're trading your trade, you expect this kind of a trade to happen for you, because maybe you're taking a trade at support and you expect it to bounce, and it usually bounces a good 100 pips for you, and you know that's how your targets are usually set. But that doesn't mean you just let it stop there. You got to learn to let those things run to make even more profit. All right, but you want to know what your expectancy is, because that way you stay in your trades a little longer. Then, guys, you must do weekend chart analysis. This is something I've done all the time and still do it today. When the markets are closed, I'm looking at the markets. I'm looking at my charts. I'm studying patterns, looking for support and resistance levels, looking for how the market reacted at certain points, looking for how candles reacted at points, and whatever, what the candle looked like at that level. So many things, because you'll start to see patterns. You'll start to see so much that you can start to learn and understand. So you'll say to yourself, yes, when I see the market hit this level, I kind of expect it to do this. Or when I see it hit this level or go here, I expect that. When I see this pattern forming, I expect that. You'll start to understand and learn your patterns, like triangle patterns and so forth. So those things help you a ton. Then the next thing, guys, is leverage. So leverage is credit borrowed from your broker, giving you more buying power, basically. So traders use leverage to generate bigger earnings, okay? But if you have more buying pressure, if you have more buying power, you can increase your gains. So traders use that to their advantage, but then sometimes that is a disadvantage, all right? So traders will usually aim for higher profits with smaller amounts of money when using leverage. So that's the plus side of leverage. But the downside of leverage is when that leverage falls against you, you're losing big money most of the time. All right. So with the leverage, a trader can profit more, but you can also lose more. So like a 50-to-1 leverage means that you're for every dollar in your account, you basically can put a trade in worth $50. Okay, so 50-to-1 leverage. But here's the difference between a professional trader and a retail trader. Professional traders do trade with leverage, but they're not skyrocketing their leverage like retail traders are. All right, so the retail trader is trying to get rich on one trade, but that professional trader is just steady and consistent. And then you watch, he sees that account growing and growing over time. But the retail trader, big profit, big loss. Good profit, big loss. That's what you see with a lot of retail traders because they're trying to hit that home run on every trade because they're over leveraging. This is basically the trader up here. And boom. And then one of the most important things, guys, is your trading psychology. So as traders, we believe that we're trading against the market versus the market. But little do we realize we're versing you versus yourself, all right? So how, you might ask me? I'm going to say basically because just to pull the trigger on a trade, you become filled with so many emotions, such as, should I take this trade, right? Will this trade work? Will it be a successful trade? All right, will I lose on this trade? So many things go through your mind. You also think about, will I miss out on a big run? So you just jump into the market just because you think you're going to miss out. So these are only some of the emotions that we're filled with when we're taking trades. And it doesn't stop once you take that trade. While that trade is running and you're in that trade, all kinds of emotions are running through you, right? So you're going to always have to deal with your emotions and with your ego. You don't want to be wrong. You got an ego where you think you're good and you're this and that, and you're going to take this trade and it's going to be successful. Don't get overconfident with the market, all right? The market will smack you right back down to reality. All right, so you're never gonna remove those emotions, but you got to learn to control those emotions. Once you control those emotions, that's when you start becoming a profitable trader. So basically, like I said, emotions, part of an emotion is being a disciplined trader. So disciplined traders have patience. They follow a plan. Don't break your rules. Journal their trades. Manage risk. Focus. Consider their trading as a business, and then they profit. All right. And that leads to success. That's how you can become more proficient trading the markets. Those last two things I just talked about, psychology, which is part of discipline, is going to be a big thing for you. And then another thing that's super important is money management. All right. Money management is major because you don't want to be losing, and this is also falls under the line with leverage and so forth, because you don't want to be taking trades, losing big money, losing more than, I say no more than 3% capital. But some traders are losing 10% capital. If you're losing 10% capital, 5 losses in a row, and half of your account is gone. And then the next thing you know, you also can't trade with as big as you can't trade your lot size as much. So you're going to start using smaller lots because now you're starting to wear out your leverage and so forth. So the money management is major. You can lose 3 trades. If you manage your trading right, you could be a 50-50 trader and be a very, very successful trader. 50-50, you're a good trader. Because if you're managing your money, your account based on 2 to 3% losses, and you figure you lose 3 trades, but you have that one good trade, so you won one trade out of 4, you could still be a profitable trader every single time. And that's less than 50%. That's nearly 25%. And that's the truth, guys. That's the main truth. So it's not your system that's going to do this for you. It's your mentality. So then the very last thing that I want to tell you about is the Holy Grail. Stop looking for that Holy Grail, because guys, you're that Holy Grail. Once you learn to understand that your mentality controls your trading, then you'll stop searching for the Holy Grail. Let me tell you why. Because we could take a bunch of traders, put them all in a room and keep them in there for a month or so and have them all trade the same things. But what's going to happen? There's going to be all different results. All right. And we're all trading the exact same system. It's not the system. It's your mentality, which means there's no Holy Grail. You are the Holy Grail. So controlling your mind, controlling your psychology, controlling your discipline, that's the Holy Grail of trading. Not this system, not Ichimoku, not price action, not this or that. You are the Holy Grail of trading. Believe that. All right, guys, so visit me. Come see me at my site, www.fxatOneglance.com. And if you like, become a member. All right, so till next time, have a great one. God bless.